Hello, traders. Welcome to another episode of our free training tutorials. This is Forex training for free on Leading Forex YouTube channel. This is episode 20 of our tutorials. My name is Kofi, your admin for this channel. If you are new to this channel, there's a lot in stock for you. Just stick and stay and enjoy this video. In today's video, we will be talking about some vital components of technical analysis. Now, those of you who have been following this playlist on our channel, the playlist name is Forex Training for Beginners. If you've been following this channel, the part 8 of this playlist, we made mention of technical analysis, and we talked about the type of technical analysis that we have. I mean, the type of technical analysis that we have, which is price action. So if you go to the part 8 of our playlist, which is the free Forex training for beginners, you will see that we talked about support and resistance. We also talked about similar trends and patterns as part of technical analysis. We also talked about indicators as trading tools, candlesticks formation, time frames, type of charts, robots, softwares, and so many others. Now, so far so good. We've been able to talk about support and resistance, which is part of the playlist, Forex Training for Beginners. When you go to that playlist on this channel, you will find a video on support and resistance. We also talked about indicators. So similar trends and patterns, I think we haven't talked about yet. And then also time frames. Yes, we haven't really talked about time frames. And then when it comes to type of charts, yes, we haven't really talked about that yet. And this one too, we haven't talked about that. Now, even with the two that we have so far talked about, which is support and resistance, and then indicators, I still feel we haven't finished because there's still more to these two topics alone. But for the sake of all of us, we need to talk about or touch all the aspects so that we can have an idea about how we can use any of this technical analysis to trade the Forex market. So today, I would like to talk about candlesticks formation. Even with this, I've talked about it a little, which is part 10 of our playlist. When you go to the part 10 of our playlist, which is Free Forex Training for Beginners or Forex Training for Beginners, the part 10 should give you an idea about candlesticks formation. Now, I talked about candlestick formation in part 10, and I promised that I was going to come back to this topic and then finish it up. So just like I promised, today I'm going to continue from candlesticks formation. All right. Now, support and resistance has been dealt with. Indicators, same. Today, let's go back to candlesticks formation. There's still more on candlesticks that we need to talk about. So in today's video, we will be talking about candlesticks. And if you are ready, I'm also ready. Let's look at what we want to talk about under candlesticks today. Now, under the Japanese candlesticks, there are 4 main topics that we're going to talk about under this topic alone, under candlesticks alone. We're going to talk about the basic Japanese candles pattern. We're also going to talk about single candlestick patterns, dual candlestick patterns, and then triple candlesticks pattern. Each of this topic, we're going to have at least 2 videos. So this topic is going to have 2 videos. And then also single candlesticks pattern, we're going to have at least 2 videos. dual candlestick pattern, we're going to have at least 2 videos. And then triple candlestick pattern to at least we're going to have 2 videos. So in all, we're expecting about 8 videos for us to be able to deal with this topic known as candlesticks proper. So today we're going to talk about basic Japanese candlesticks pattern, which is the first of the topics. So today we're going to take this one. And then, like I said, this is going to be 2 videos. All right. So if you are ready, let's begin with the basic candlestick patterns that we have. And these are some few things you need to know when it comes to candlesticks. Let's talk about the general knowledge. Okay. Now, in the part 10 of our videos, we talked about how candlesticks are formed. That is the part 10 of our video. If you haven't watched that, I would suggest that you go back and watch that video. You get to know how these candlesticks are formed. Okay. Now, the general knowledge continues. And with this point, what we're saying is that the longer the body is, the more intense the buying or selling pressure. This means that either buyers or sellers were stronger and took control. I'm going to demonstrate that very soon. The point 2 says that short bodies of candlesticks imply very little buying or selling activity. In trading language, bulls mean buyers, and then bears mean sellers. But in the stock market, when you hear the word put means buyers, and then pull means sellers. So what we're trying to say is that the candlesticks, when they are formed, when they have a long body, the long body indicates a strong selling or buying pressure. And if they have short bodies, the short body represents very little buying or selling pressure. Is that okay? So in trading language, when you hear bulls, the bulls are in the market. What we are trying to say is that the buyers are in the market. And when you hear the bears are in the market, it means we're talking about sellers. So if someone should see a trading chart and say, okay, we're going to go bull or we're going to go bullish, all he's saying is that we're going to go buy. We're going to go buy. And whenever you hear the word we're going to go bearish or the market is bearish, then it means the sellers are in control. So the bears are for sellers, the bulls or the bullish is for buyers. And then in stock market, you hear put and pull. The put is for the buyers and the pull is for the sellers. This is general knowledge you need to know when it comes to the Forex market. Is that okay? Good. Now let's continue from this angle with this knowledge. Quickly, I would like us to look at the candlesticks just as I have explained. Now, when you look at these 2 candlesticks, it gives a demonstration of what I have just said. So this is a white candle, and this white candle, you see it having a very long body. This is the whole body, a very long body. And this one is having a very short body. This is a black candle having a very long body, and this one is having a very short body. Hope you can see that. Now, the white candle indicates the bulls, that's the buyers. And then the black candle indicates the bears or the sellers. So the bulls means the market opened here and then made its way all up to that level. And then came all up here, but closed around here. So the market closed here, it opened here, and then it closed here. Looking at this one too, the market opened here. It's also a bull candle. The market opened down here, and made its way all up, and then it closed somewhere here. So these two candles are bulls, but one is having a long body, one is having a very short body. So the one with a long body indicates a very strong buying pressure. It means the buyers really took the market serious, and then they took the market high in their own favor. So that is how come you will see the candle with her body being very long. Is that okay? Now, when it comes to the black candle too, it means the market opened at the top. As for the sellers, always the market opens at the top, and then it made its way all down, and then came back, retraced a bit, and then closed here. So you see this candle opened here, and then it closed here. So you see the candle being very long, the body being very long. And then the second candle, you see it having a very short body. The market opened here, and then it closed here. So the longer the body tells you the buying or the selling pressure. The shorter the body tells you the little pressure in the market. Is that okay? Good. If you understand this concept, let's continue with our lesson. Now, long white Japanese candlesticks indicate that price increased considerably from open to close, and buyers were aggressive, just like I've explained. And then long black candlesticks indicate that price fell a great deal from the open, and sellers were aggressive. So when you see the long bodies, it means they were aggressive. I mean, the buyers or sellers were aggressive in the market. Is that okay? Now, let's continue. Now, apart from the long bodies, we also have about shadows. Now, apart from the body, which you see here being very small, you see a very long line, okay? These long lines you see are called shadows. The lines you see are called shadows. Is that okay? So if the body is being long and short, tells us the buying pressure or the selling pressure. What of candles that have long shadows? Okay, long shadows. What do we say about that? Now, candles, if you look at this candle, which is a black candle, means a sell candle, all right? This is a sell candle or a bear candle. A white candle here means a bull candle. The price went up. But what do you see? If this is a sell candle, look at how price went all the way up. Price went, this is how this can be interpreted. It means the price opened at the top here, and then buyers took the price all the way up. They took the price all the way up, but they couldn't hold on to the pressure. And then sellers came into the market from this level, and then they took the trade back down, retraced all that the buyers had made. They retraced it all back to the entry level, and then they continue further, took the trade all the way down, and then they also couldn't hold on to the selling pressure, and the buyers came in from this level. They took the trade back up, trying to take the trade back in their favor, but at the end of the day, the trade closed in the favor of the sellers. Is this clear? Let me take it again. What we see here is that it means the market opened at the top here. This is a sell candle, so the market opened at the top here. The buyers took the market, and then they took it all the way up to this level, but they couldn't continue the pressure. Sellers came into the market. They took the price from the buyers, started retracing all the achievement of the buyers. They retraced it all the way back down to the level of entry, and then they continued the way back down in their favor to a certain level here. And then the buyers were like, no, we won't make this sellers continue. So the buyers came back into the market, took the price back up, trying to take it back up. But at the end of the day, the market closed in favor of the sellers. So it means that this whole candle is telling you that, yes, there were buyers and there were sellers, but at the end of the day, the sellers won the market. Is that okay? Now, let's look at the white candle, which is also a bullish candle. So what it means is that the market opened here at the down here, and then the sellers took control of the market, took the market all the way down to a certain point here. And then the buyers said, no, we won't allow these sellers to continue. So the buyers came into the market. They started retracing all the achievements of the sellers. They took the trade all the way back up to entry level. And then they continued the trade in their favor as buyers to a certain level up here. But they also couldn't hold on. The sellers came back into the market, started pushing the buyers back down. Price finally ended and then closed in the favor of the buyers. So the buyers at the end of the day won the market. So when you see a long tail or shadow, it tells you that certain people were in control, but the opposite or their opponents came into the market and then took the price from them and brought it back down. And that is why you see the tail or the shadow. So the shadows you see are actually the work of both the sellers and the buyers. It means with this candle, the buyers did their work. By the end of the day, the sellers erased all that was done by the buyers. And then they took the trade in their favor. But they also couldn't withstand the pressure. The buyers came in again. By the end of the day, they won. The market closed in their favor. The opposite is this. Is that okay? This is what the interpretation of this long wick or the long shadows or the short shadows you will see in the market means. So when you see pullback or when you see these shadows on any of the candles, it should tell you what has actually happened in the market. Is that okay? If you are okay with this, let's continue. We are still on the general knowledge. Now, what I have just explained is what is here. So the upper and lower shadows on the Japanese candlesticks provide important clue about the trading session. So the upper shadow signifies the session's high, and the lower shadow signifies the session's low. If a Japanese candle has a long upper shadow or a long lower shadow, this means that buyers and sellers flex their muscles and bid prices higher. But one reason or another, sellers or buyers came in and drove price back up or down to end the session back near its open price. So when I go back, you will see what we are trying to talk about. So each of the groups, the sellers and buyers, they both flex their muscles. By the end of the day, one group won. And that is what this whole interpretation of these candles mean. Now, let's continue. Now, we are done with the general knowledge. Let's go to the topic, basic Japanese candlestick pattern, which forms part of the first topic I told you about, which is here. All right, so we're tackling this now. The basic Japanese candlesticks. That is where we're going right now. Are you with me? If you are with me, I'm also with you. Let's continue. So, basic Japanese candlestick pattern. These are patterns you will see in the forex market, and we'll be looking at the practicals of it. All right. Now, the first pattern we would like to talk about is called the spinning tops. Spinning tops. Spinning tops. Now, the first point here says that Japanese candlesticks with a long upper shadow, long lower shadow, and small real body are called spinning tops. You soon see the example. The color of the real body is not very important. Take note. The color of the real body is not really important. The spinning top pattern indicates indecision between the buyers and the sellers. I repeat, that is the point 2. It says the spinning top pattern indicates indecision between the buyers and the sellers. Is that okay? Good. Now let's look at an example of a spinning top candle. Look at it. Spinning tops. When you see this kind of candles in the forex market, they are called spinning tops. We will soon go to the MT4 and identify them. But listen carefully. How can you identify them and use them to trade or to take a decision in the forex market? This is where it is very important. Now, with the explanation that came earlier, we are saying that you will see a very long up shadow and see a very long down or sell shadow. So there's a long sell shadow, a long buy shadow. By the end of the day, the price closed in between the two. So you see a very small body, equal ups and downs, equal up and down, a very small body. And the point 2 says that we shouldn't look at the color. The color is actually not important, although this color ended in favor of the bulls, which is the buyers. But at this point, they are saying that we shouldn't consider the color. The color is not important. Is that okay? The second candle here, you see a very long shadow for the buyers, a very long shadow for the sellers, and then price closed very little, almost close to the opening price. This is the open price, and price came back close, almost very close to the open price. This candle is for the sellers. It means the sellers won the day, but the instruction says we shouldn't consider the color. We should forgo or ignore the color. Now, when you see any of these candles in the forex market, all what it means is that there is indecision. There is no direct decision whether it is for the buyers or the sellers. There is indecision in the market. It means no one is actually in control of the market. When you see this candle, immediately you see a candle like this, which is a spinning top, it means no one is in control. The buyers are not in control. The sellers are not in control. So if none is in control, how do you trade the market when you see such a spinning top? Now listen, the small real body shows the movement from open to close. And the shadows indicate that both buyers and sellers were fighting, but nobody could gain the upper hand. Did you get this explanation? I take it again. It's very important. Listen, it says that that's the point 1. The small real body shows little movement from open to close. And the shadows indicate that both buyers and sellers were fighting, but nobody could gain the upper hand. Point number 2. Even though the session opened and closed with little change, prices moved significantly higher and lower. Point number 3. Neither buyers nor sellers could gain the upper hand, and the result was a standoff. Point number 4. If a spinning top forms during an uptrend, listen carefully. This is where you need to catch the bait. It says if a spinning top forms during an uptrend, this usually means there aren't many buyers left, and an opposite or possible reversal in direction could occur. Did you get that? I repeat, if a spinning top forms during an uptrend, so a market that is going up, when you see a spinning top forming at the top, which is an uptrend, this usually means there aren't many buyers left. So it means there are no more much buyers in the market, and a possible reversal in direction could occur. Now let's finish the last point and then we go straight to the MT4 on the chart and see. If a spinning top forms during a downtrend, this usually means there aren't many sellers left, and a possible reversal in direction could occur. So when you have a sell market, a market that is coming down, and then you see a spinning top forming, or let me draw it here. You see a market that is coming down, and then a spinning top forms. What it means is that there are no more much sellers in the market, and so a possible reversal could occur. This one, a possible reversal from the buyers could occur. Is that okay? Now, at this point, I would like to go straight to the MT4, and let's see if we can actually see what this instruction about spinning top is saying. Now, let's go straight to the MT4. And on the MT4, I would like you to look at this. Okay. Whoa, where is my MT4? I can't really find my MT4. Where are you, MT4? Where are you? Oh my goodness. I can't find my MT4. Is there any problem? Let me actually check what is happening. Okay. I don't know why I can't see my MT4. Anyway, let's see. Okay, let's see if I can really see it. All right. I still can't see my MT4. Where is the MT4? Come on. MT4, come again, come again, come again. All right, let's see something here. Okay, just let's see something. This is a screen I want to show you. And with this screen, I want you to take note of this. Okay. With this screen, let me really clear some things. No. And see if we can see my MT4. Okay, let me share the screen again and see if I can see my MT4. Yes, I can see my MT4 now. Thank you. Now let's go. This is the MT4. All right, good. This is the MT4. Now, we've learned about spinning tops. So let's see if we can see them here. Can you help me identify spinning top? Currently I'm seeing one already. Look at one here. Look at where I have just circled. Can you see it? Maybe I should zoom a bit and then we'll see if we can see it. Let me clear this. Now, look at this point here. Can you see a spinning top here? Look at it here. Can you see where I'm circling? There's a spinning top there. Now, this is a downtrend, isn't it? Let me bring this in the middle, okay? So that you can see it well. Let me clear this. This is a spinning top here. Okay, look at it. A spinning top here. Now, the market was a downtrend. Is that not it? It was a downtrend. This is USD chef, USD Swiss franc on the daily time frame, okay? The market was a sell market, and then we had a spinning top here. So we are saying that when the market is a downtrend or for the bears and you see a spinning top, there is a possible reversal. And what happened? A possible reversal took place. A possible reversal took place. Or I'm lying. Today's date is today is 4th September 2021. And this is what we can see now here. Okay, I'm not doing something that is far. This is a current chart. This is the end of the chart. Very current. Again, I can see another spinning top. I don't know if you can see it with me, but look at it here. There's another spinning top here. Can you see it here from the top? Can you see it? That is a spinning top. Now, what happened? After the spinning top formed, what did you see? The spinning top we saw here formed at the top. So it formed in a bullish market. So what are we expecting? A possible reversal. And we saw all that over here. Did you also see that? So the ability to trade this pattern, which is one of the basic patterns, is for you to be able to spot the spinning top. If you cannot spot the candle, then it will be difficult for you to know what to do. All right. So that is what you need to look at. All right. There was also another spinning top here. Look at it, 2 spinning tops. And they all showed something. So your ability to spot a spinning top will determine whether you can catch the trade or not. Let's go back a bit. Let me go back a bit and see if I can spot more spinning tops. Yes, it looks like this is a spinning top, but I don't know. It looks like the top one is rather longer than the downline, but I don't know. Look at it. Is it a spinning top? That would be a decision for you to take, but it looks like it is, but not accurate. So let's allow that, okay? Let's allow that to go. Now let's go back and see if we can see more spinning tops, okay? Let me go back a bit. Are there more spinning tops? Let me zoom and see for the sake of time so that, okay, yes, so there's one here, but which I am not so certain because it looks like the top shadow is a bit longer than the down shadow, but I don't know what you say about that. Look at it here. It looks like there's another spinning top here, but it looks like, again, the top shadows are longer than the down shadows. I don't know if you also see the same, but that would be a decision for you to take. But let's continue. I just want to spot one more spinning top, then we look at it. Look at one here. Yes, I can see one here. Look at one here. This is a spinning top. Or you will say the shadow, sorry, the body is a bit big. Okay, if it's a big shadow, sorry, let's leave it. But there's one here. There's one spinning top here. Even if you decide not to consider this one, there's one here. One spinning top over here. And with the spinning top here, it's an uptrend, and you spotted the spinning top here. So a reversal is possible. Again, look at one here. I'm seeing another spinning top. If I go back a bit, look at here. There's also another one over here. Look at one spinning top here. Can you see it? So this is a down, and then a spinning top is formed. So a possible reversal. Now look at another spinning top here. I'm seeing another one here. This is another spinning top here. Can you see that? I just want you to be able to spot them when you see them. So I'm doing the last example. Is that okay? I'm doing the last example so that you can spot them when you see them. Look at them. Look at another one here. Another spinning top here. Can you see it? So there was another spinning top here, which was a downtrend, a down market. So what do you expect? A possible reversal up. And then it happened. So your ability to spot them will determine whether you can catch the trade fast or not. This is USD Chef daily time frame. Okay. Now you can do this on all time frames. You can choose to do this on the 4-hour time frame, on the 1-hour time frame, weekly time frame, or monthly time frame, depending on what time frame you use to trade. But I'm actually giving you this example using the daily time frame. Is that okay? So when you go back, you will see a lot of them, okay? When you go back, you can see a lot of them, all right? So that is that. Look at another one here. I've just gone back a bit more and I'm seeing another one here. Look at one here. Another spinning top here. You understand? Look at another one here. Oh, this is not. No, this is not a spinning top. It's another type of candle. We'll look at that very soon. This is also another type of candle. We'll look at that very soon. So this is all about spinning tops when you spot them. All right. This is what they do. So just like the note said, the note is saying here that once you spot them, that's the point 4 and 5. The point 4 and 5 is saying that if a spinning top forms during an uptrend, this usually means there aren't many buyers left and a possible reversal in direction could occur. If a spinning top forms during a downtrend, this usually means there aren't many sellers left and a possible reversal in direction could occur. And I've just demonstrated that to you on the MT4. So it's up to you if you want to be a trader that use candlesticks then the first thing you need to know are spinning tops, which are some type of candles that are formed. So the formation of the candles interprets the market or what is likely to happen in the market. So the Japanese who used to trade this were using these candles to interpret the market. And this is just one of them. Is that okay? Now let's move on. I am teaching you practicals here. I'm not just teaching you theory. I want you to get a practical so that once you begin to trade, you will know what exactly you are looking for. So if you are going to be a candlesticks trader, the spinning top is one of the candles you need to be looking out for. Is that okay? Good. Let's continue. The next candle we'll be talking about is the Marubozu. The Marubozu indicator. Or, sorry, candle, not indicator, candle. The Marubozu candle. The Marubozu candle. This is still under the basic candlestick patterns. The Marubozu is also another kind of candle that you need to look out for. We have the white Marubozu and then the black Marubozu. Now, these Bozu indicators, if you look at them, they do not have shadows. They do not have shadows. There is no shadow at the top and there is no shadow at the down. No shadow here, no shadow here, no shadow here, no shadow here. Is that okay? The candles are fully filled. You don't see a shadow anywhere. Fully filled candles. The buyers were fully in control. The sellers were fully in control. Nowhere did we ever have the other kind of traders coming in. So here, the buyers were fully in control. No sellers at all. Over here, the sellers were fully in control. No buyers at all. That is what the Marubozu indicator means. Now, let's look at further explanation of this Marubozu. So a white Marubozu contains a long white body with no shadows. This means that the candle opened at its lowest price and closed at its highest price. This candle shows that buyers were in control of the entire session. So on that day, there weren't sellers. It was totally buyers. Now, the black Marubozu contains a long black body with no shadows. This means that the candle opened at its highest price and closed at its lowest price. This bearish candle shows that sellers control the price action the entire session. So that day, it was sellers throughout. I hope you catch that. Good. We will be doing the last demonstration on the chat on the MT4 very soon, but we wouldn't want to keep this video long, so let's quickly run through. Now, what are the guidelines when it comes to trading with a Marubozu candle? These are the few guidelines. White Marubozu, which is for the bullish or the buyers. It means if a white Marubozu forms at the end of an uptrend, a continuation is likely to happen. So when the trade is going up, let me do a little demonstration here. When the trade is going all the way up and then a Marubozu is formed, what it means is that there's a possible continuation of the trend. Is that okay? So the opposite, when the market is a downtrend and then a Marubozu is formed, it means there's a likely possibility of a continuation of the sellers. Is that okay? So the first point here says, if a white Marubozu forms at the end of an uptrend, a continuation is likely to occur. And if a white Marubozu forms at the end of a downtrend, a reversal is likely to occur. Now, let me explain that also. So the market is a downtrend, okay? The market is a downtrend. And then a white Marubozu forms. A white one forms. When a white one forms, it means a possible reversal is there to happen. But if a black Marubozu forms, then it means there's a possible continuation. Get the difference. When a black Marubozu forms, it means it shows total control of the seller. So it means there's a possibility of more selling. But if a white Marabozo form, that is for the buyers, it means the buyers have come into the market completely without sellers. So it means there's a possible trend reversal. Do you get the explanation? Good. The same way, when the trend is for the buyers, okay? When the trend is for the buyers, and then a white Marabozo is formed, it means there's a possible continuation of the trend. But when a black Marabozo is formed, it gives you an indication that sellers have taken over the market the whole day. So a possible reversal of the trend will happen. Did you get this explanation clear? Good. So this explains the first and second points. So the same thing with the black Marabozo, the opposite. If a black Marabozo forms at the end of a downtrend, a continuation is likely. If a black Marabozo forms at the end of an uptrend, a reversal is likely to occur. So I've just explained that. Now, let me add one more for the sake of time before we go to the chart. Okay. Now, let's continue straight to the chart. All right. Okay. I think I need to end here. I need to end here with the first part. Okay. We are ending here with the first part. Subscribe to this channel if you love what you are seeing. This is the part one of the basic candlestick pattern. I told you each of the topics will have 2 videos. So like I explained earlier, each of the topics will have 2 videos. So this is just the first video of this, the basic Japanese candlestick pattern. So today we've learned about spinning tops and then Marabozo. We have a lot more. We have the doji, the hammer, and the rest to talk about, all under this one. And then also, once we are done with that, we'll continue from the single candlestick patterns. Then we'll go to the dual candlestick patterns. Then we'll go to the triple candlestick patterns. If you love what you have seen, subscribe to this channel. More videos coming on your way. My name is Kofi, your admin for this channel. I would like to make this announcement. I have received or gotten 30 people to teach them Forex trading and then giving them my trading tools. And like I said earlier, once I get up to 30, I may have to pause and then finish with them. That is why if you look, I've not been able to come with more videos on the channel because a lot of people are in the pipeline for me to teach them. So the time I have is a bit limited, but I'll try my best to make sure those of you who haven't subscribed to the one-on-one will still have all the lessons you're supposed to have on this channel. So for now, I am not taking new clients for one-on-one mentorship. I'm not doing that for now. So that is on hold for now until further notice, okay? Now I have a lot in my hands. I need to make sure I satisfy those people before I can jump in to take more people. So this is the announcement I want to make. Once there is enough space for me to come back and add more people, I will let you know. But for now, I want to be able to feed you on the channel as well. I want to be able to do more videos on the channel for you. So I'm not going to take more people for the one-on-one mentorship. Is that okay? Thank you for understanding. I'll see you with the next video pretty soon. Now I'm back on the channel. You'll see more videos coming your way. Thank you. I'll meet you with the next video on this channel. Subscribe, hit the notification bell, share this video, and tell other people about this video and then channel you have come across. Thank you.